Hello everyone, Trader Paris again from Traderstock. Today I'm gonna touch the subject of how can you trade on different market structures. And what I mean by different market structures, I mean you might have, let's say, for 2 or 3 months, massive volatility, things are going crazy, you have up moves, down moves, all of them are violent. You have volume kicking in, you have, like, let's say in 1 minute, let's say 20,000, the next 1 minute it's 15,000, and things are going, things are a little bit hectic. There are many opportunities, and okay, I shouldn't go further on this topic, but let's say when there's volatility, there are opportunities. Let's leave it up to there. And on the other hand, what do you do when there is less volatility, when there are not many opportunities, when the market just keeps grinding up? And I'm touching this subject because I'm gonna bring up the daily S&P, because we are at this moment right now where we have lower volatility. There is not much going on. We had many different, I wouldn't say different, there was a lot higher volatility in the past weeks, and right now things are again a little bit calm. We keep grinding higher with slow paced moves, low volumes, especially on the morning session of the S&P when the cash market opens. And I wouldn't say there are many opportunities. Now, this is my main problem as a trader as well. I'm sometimes very slow to shift gears, and when I'm saying shift gears, you cannot have the same gear when you're trading, when you're day trading, and when you're trading either it's swing trading or scalping, or if you go, let's say, for 20 or 30 point moves, it doesn't really matter. You've got to have different strategies according to the volatility of the market, unfortunately. I remember, because I have been trading for many years, since 2004. I remember when I started trading, you could just trade bonds, or you could just trade DAX, or you could just trade Euro stocks, and you can stick to one strategy for let's say 3 years. Things were predictable back then. We didn't have too many algos, we didn't have too many computers and machines trading. I mean, so things were, I would say, predictable. The interest rates were not going up and down like crazy like they are now. If we had a 75 basis point move back in 2006, the whole system would have collapsed. Yeah. So again, as I said in the weekly recap video, we live in different times. That goes for all jobs, not just about trading. The world is going a little bit crazy, so trading is crazy as well. But how do you profit? How do you recognize, first of all, when the volumes are dropping, or when the volatility is dropping, and the volumes, of course, because when the volatility is dropping, volumes are dropping as well. Yeah, I brought the daily S&P chart to give you an indication of, well, kind of an indication, because you can't really see the intraday moves, but I'm gonna stick into volume, and I'm gonna stick into the VIX futures. So the VIX futures are pretty much the only measurement of predicting volatility in the S&P and volatility in general. So when things calm down, we have higher liquidity, because not many people are getting stopped like every other minute. Yeah, so things are a little bit more stable. Things are slow moving, not many opportunities, and I would say, in one word, boring. So that depends on the trader as well. I'm a more aggressive trader. I prefer volatilities because there are more opportunities. But how do you recognize? How do you recognize that you have to shift your strategy when volatility drops? Well, I took too many losses until I stuck with this chart, mainly with this chart. So that is the VIX. S&P VIX futures, so that's the volatility measurement of S&P. If you join my webinar, you're gonna hear me say many times, anything above 27, we're gonna have a wider profit. We're gonna take wider profit, and we're gonna have a little bit wider stop. And when the VIX drops below 26 and 27, we're gonna be going for around 5 to 10 points per move, and yeah, things are a little bit more quiet, and you have to be more patient. Now, how do you do that? How can you change from one day, because the market from one day to the other can be highly volatile, and the next day can be nothing going on. Yeah. How do you adjust? How do you adapt into the market? Because either you adapt or you die, as we say. Yeah. Unfortunately, that's the way it is. Well, one measurement is the VIX. The second measurement is, if you are day trading, it depends on the price action. So if you see a big move, happening and there is not enough volume in it, let's go into the 1 minute chart. Let me go back into Friday session. So let's say if you see moves happening with relatively low volumes, that's why I have the line here, everything in 1 minute above 10,000 is good volume. If you have only spikes up to 10,000 and then the market is around 5,000 per minute, then you don't really have volume and you don't really have aggressive price action. It usually goes only one way, so either it goes all the way up or it goes all the way down, which is boring. If something goes all the way up, let's look at the 5 minute. Without giving him any retracement, what are you going to do? What are you going to do? Also, I have observed in low volatility environments, the technicals sometimes do not behave that well. I'm not going to tell you what strategy you're going to have, because each person is different and everybody has his own strategies. The only thing I can say, you cannot trade the same every day. You have to take into account the volume and the volatility. So I'm a trader that trades with volume. So what do? So okay, Paris, you recognize the problem, yeah? Well, what about the solution? Well, the solution, it doesn't change. The part of the solution doesn't really change if we have higher volatility or if we have low volatility. In both cases, you have to be patient, and I'm going to give you an example. Let's say that the market is going crazy. You have Fed rate hikes, there is war going on, there is whatever, yeah, and things are going up and down. What are you going to do? Are you going to keep on trading? Are you going to keep on trading every move because you suddenly see a move? No. Your strategy is to be patient and to trade technically and to wait for the level and to wait for the market to give you the entry. Maybe the market gives you the entry 5 minutes past the cash open, yeah, maybe 10 minutes past. Usually it's going to give you that opportunity quite quickly because you have high volatility, yeah. But if it doesn't go into your technical level, you're not going to trade either way. Yes, it's very nice watching the market going up like crazy and down like crazy, but so if it doesn't go to your technical level, what are you going to do? Are you going to trade in a crazy market? Or the market is going bananas and there are no bids and offers, and like last Monday there was volatility interruption on a manufacturing production figure, US manufacturing production, which was crazy. What are you gonna do? Are you gonna go and trade in thin market? No. Again, you have to be patient. So in both cases, either if the market is behaving like crazy, or the market is behaving boring, going step up, doesn't retrace. In both cases, you have to be patient for the market to give you the entry, or if at least it has to go to your technical level in order to go long or to go short. There is no other way. Take volatility like any other business. Let's say you have an ice cream business, yeah? Your busy periods are going to be during the summer. What are you going to do? Are you going to complain in the winter because the weather is cold? No, it is what it is. So trading in a way is like every other job. Some points of time you have like crazy volatility, many opportunities, it is interesting, you like to watch it because who doesn't? And you have periods of low volatility. Unfortunately, the last few years with QE, we had too many years of low volatility, and sometimes it scares me that we might go back into this era of nothingness, which I remember back until 2019, 2020, basically until the pandemic, the S&P was trading what, on a 30-point range, and right now you have a 30-point range in 1 minute. So things have changed, yeah. The only thing I can say again, either if it's very volatile or if it's dead, at the end of the day, And I have stressed this topic many times. Not every day is suitable for trading. Not every day is suitable for trading. You have to recognize in which days you perform the best and in which days you perform the worst. If you see a move going up, slowly up, doesn't trace, up, doesn't trace, up, doesn't trace. So it doesn't give you the invitation, let's say, to go long in an upward swinging market. What are you going to do? Are you going to cap because you are pissed, you're going to go and buy the highs? You're going to lose money. What are you going to do? So I know it's difficult. For myself, I'm a victim of my own emotions. Sometimes it's very easy to explain something on a Sunday, but sometimes it's very tough when you have the ladder in front of you and you have so many emotions and that kind of stuff. So easier said than done. But if you are here to make money, just listen to this piece of advice. If you do not feel comfortable about any given day, you just don't feel comfortable, you don't like the price action, and just don't trade. Do not trade. Do not trade. You are going to regret it at the end of the session, or maybe after you calm down if you lose money, and you're going to say again, why? You're going to say to yourself, why? There was nothing going on. Why did I trade? Unfortunately, trading is doing the right thing at the right time. Doing the right thing at the right time. These two, I will say it again, are equally important. If the market doesn't give you opportunities, what? You're going to trade for the sake of it? Go ahead. Go ahead. I'll see you on the other side. There is no other way to say it. So, one measure, I'm going to stop talking too much. Watch the VIX. Watch the VIX before you start your day. What do you see here? The way I see it's going back to below key technical levels. So that was the break in the VIX. Things were going a little bit crazy in October. Crazy, in quotes. Not very crazy because we were standing in a range in October. This is the daily chart. Let's say we are in between here and here. It's no man's land. We broke on no man's land 3 or 4 days ago. And again, there was nothing going on. There was no. Look at the spikes in volume on the daily on all the other days, and look at this. Why? People are waiting. People are waiting for the Fed. People are waiting, I don't know, for whatever reason. The markets are waiting for another sign that what they should do. I'm not going to go into the fundamental side again because that's not part of the video. I'm creating this video to let you know that not every day is the same. Unfortunately, and things change, have changed so much the last, I would say, 7 to 8 years when it comes down to trading, that you should be able to adapt in any current market environment. You are going against algorithms that they have embedded in their code to do what they have to do when the volatility goes down. So they are going to trade a little bit less. What are you going to do? Are you going to trade like it was like it's during the pandemic and things are going crazy? You cannot do that. You have to, in a way, follow what the market does. Is it boring? Is it frustrating? Yes, it is. Man, we have more frustrating things in life than volatility going down. So that's the key point about the video. I don't want to make a long video about it. If you have any questions, drop me an email and how you should deal with this, and I'm gonna try to answer to whoever needs help. Again, I have been through all this kind of stuff. I'm not saying I can manage it perfectly. Words are words and actions are actions. But to be honest, this is one of my worst enemies. I cannot yet. So if the market changes phase, I call it changes phase from Monday to Tuesday. Do you think I'm capable of adapting from one day to the, no, I'm not. I'm not a machine. I cannot program my brain, but I cannot lose. By now, I'm not losing that much money until I adapt, and I'm saying that, whoa. So I'm losing money one day, and I'm saying, wait. Is this? Are we going back into low volatility with spikes with no volume and breaks technical levels? It doesn't go. For example, one rule that I have: if the market, let's say I'm trading, let's say 900. Let's say I want to buy 900 now that the level is here. Yeah. Let's say I want to buy 900, and the market goes down and it stops at 0075. For whatever reason, I have my bid here, and usually I'm correct when it comes down to technical levels. and it stops 3 ticks below, 3 ticks above my long, my entry long. It's once, usually when the market is behaving and there is volume, there is, there are stuff going on. It will go through double low and it will break a little bit below. It will usually always give you the entry. When it does bullshit like this, stops a little bit above, the stuff like, it's one sign where I say to myself, oh, Paris, we are going into the bullshit period, as I like to call it. And you should stop trading. The question is, me as Paris, how quickly I'm gonna react on that, yeah. And the same I would say goes for you. Unfortunately, we're not living in 2000 to 2010, the period between 2000 and 2010 where everybody was making money. We live in the period where algos are ruling, and the market changes phases from one day to the other. Maybe in 3 days we're going to have another phase that is either more boring, or inflation might go again to 12% and the VIX goes back to 40 whatever. Let me just take you to the monthly chart in the VIX. I'm gonna go back to it during the pandemic. I'm sorry about that. So that's the VIX. I was trading back then. Those were interesting times. So you went from 0 to 100. I cannot really go back to the daily chart, but you get my drift. You went from 0 to 100. You know what? In 2-3 days. Understand that things can change from at any given day. That's about it for the video. Be very careful. Be very careful. Always be careful, and make a killing out of it. Until the next bonus video, I'll be seeing you.